Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, July 24th. Michael Boutros here with you this morning. Got a packed house. George's in the house. Mark, Marco, all three Pete's, Tom, Ty, Aurelian. Great to see everyone here in the room. Lots to go over today. So yesterday kind of went off on a little Aussie extravaganza, and certainly those have been our preferred plays, or at least my preferred plays for the last couple or the last day or so. So from yesterday's update, we'll hit Aussie, which nailed the low last night. Still holding a little bit of that. Aussie yen, also the perfect drop into support, offered a nice rebound there. Aussie Kiwi continues to contract. So as I said in yesterday's piece, I'm kind of tracking that now. I'm not really actively in any positioning. But Aussie Kiwi, I think, will offer something in the coming days. Just a quick side note, guys. I had IT here in their offices kind of check out the wiring. So if you do have any issues with the sound today, please let me know right away. I'm told everything is fixed. So we'll round out with Aussie Kiwi from yesterday. Then we'll hit the rest of the majors. So dollar yen, Kiwi dollar, and dollar CAD. And then I just want to talk about the weekly charts that I posted on Friday, specifically on Euro Pound and the DXY. Obviously, the weekly charts are really what's speaking to me on those trades. I don't have, very clear-cut positioning. I know that, we're still looking on the long side for the euro. I do like that, generally speaking. Pound, I still think is vulnerable, but I don't really have a setup for it. So long story short, these bigger trades on the weekly charts are kind of really what we want to track into the close of the month. And we'll hit all three of those. Any other questions or trade setups you guys want to review? As always, feel free to throw them on the message board. Okay, let's kick off with Aussie. So here's last night's update. And recall with Aussie, the whole premise of the trade has been the weekly charts. Again, everything starting from scratch. Marco wants to look at Euro Key. So I got you on that. Euro New Zealand dollar for Marco. Okay. Here's the Aussie weekly chart. Y'all have seen this before. I don't want to bore you again. The low close that we made from back here in October. I'm sorry. This is Euro. Aussie right here. The 618 retracement, rather, the 2016 advance 73.27. That's been our level for over a month now. Look how many times we've probed into it. You have slope support, again, on a closed basis, has been sharp as can be. And our basis is just, fading drops into 73.27. It's been the same game plan for weeks now. So look, that's been the game plan. At the end of the day, 74.80 is the resistance breach that you really need to get through to suggest that a more significant low is in place. We're still within the broader downtrend. The 618 line that you see up here is at the 75% line. 75% line has been very decent resistance. Okay, that would be sort of your target on the way up if we break. But until we get out of this range, we really can't make any major hardcore assumptions on Aussie. That being said, we also have a very clear-cut monthly opening range, which remains intact. In fact, the June opening range remains intact. So 2-month consolidation, Aussie. I think you get the break to the upside ultimately, but long story short, we've been looking to play it alongside. So here's Aussie dollar on the daily chart. Put things in perspective. Looked pretty precarious, but last week when we dropped into this support again, 73.27 held. We made an outside day. I'm lying, not an outside day, but a big reversal day the following day to take us back above the monthly open. And we closed right here. Not much to do. As we started the week, it looked like this. And on the Sunday update, our focus was, where is it? Right here, was that we were opening at resistance, right? So we were looking for the downside play. Initially, I was looking for the 50 line to see if that offered any support. We sailed right through it. Right in the webinar, we were talking about this. A quick retracement highlighted 73.77. Okay, and that was what we were highlighting last night. And 73.64. Both levels of interest to try to get in on the long side. Look like a nice, decent 5-wave advance. Looking for this to be a correction. So sort of these were the entry marks. It was a gutsy call. It was a decent entry on limit, which I never, really advocate doing, at least for my personal trading, but it worked out. So at the end of the day, I took off half the trade at 74.11 against the monthly open. We need to get through 74.25 to get some traction on this. You have basic slope resistance. You have that 618 extension. So this technically has been tested with this drive higher and reversal. So that's sort of still the major area of resistance we need to get through to validate um, the advance back up to the upside. Again, initial target 74.55. That's the May low day close, and then that 74.80 level, 74.90 level. As we said on the weekly charts and the daily charts, that's kind of your big region of resistance that we need to get through um, to validate, a little bit more of a larger reversal in play. 73.59 Ty says I have the overnight low. Yeah, the overnight low here was 73.77. So it depends on the plat. Oh, I'm sorry. 73.59. No, that's what I have too. Ty. It drove just lower, right? So I like it. Broader term, I like it. If it pulls back, we'll get stopped at break even on the rest of it, whatever. But at the end of the day, I want to bring up now any type of stop that you take should be against the weekly low. Okay, so it'd be against that low. Guys, did we just have an issue with the sound? Yes. Okay, Peter, thanks. Fixed, right. Yeah, right. All right. Sorry about that. Um, so be cautious here. My whole point is heading into the US trade session, be cautious right here. If it pulls back, again, if you're looking for re-entry, you have to be comfortable with stop against that low. 74.25 break puts this thing on track. Again, 74.56, and this key region of resistance, and objectively, the July opening range high. Okay, so clear cut opening range right above support. Beautiful play. I think we'll get a little bit more clarity on this as we get deeper into the close of the month, but ultimately we are looking for that hold at 73.27. Roxy, yes, we can. Roxy wants to take a look at the Bitcoin setup. It's fallen so out of favor, Roxy, with everyone that I haven't, even on daily effects, you see, and I haven't really written about it very often. But um, yeah, we'll take a look for Roxy, 100%. Gotcha. And Ty wants to look at Euro Yen for Ty. Gotcha. Okay. So that's Aussie. The other one was Aussie Yen, another one where it looked like it needed to make a new low. It was very clear as far as the levels were concerned, and this thing has been, from a weekly standpoint, coming into a big area of support. We've been talking about 81.90 into 82 for quite some time. Here's Aussie Yen on the weekly chart. It's been a huge pivot in price. Okay, right here, 81.60, 60 is it 64 into 81.90, 82. Huge region, former swing lows from 2015, huge pivot right here in 2016, the 2017 stretch and close lows, and then you have basic slope from that 2016 stretch too. On a closed basis, it's been rock solid, right? So heading into it, inherently, support is support, right? Now the oddball or the problem I had with Aussie yen is that I still kind of do like the dollar yen short. So that's yen strength, right? So that should drive Aussie yen lower. So whether it's yen weakness that triggers it or whether it's Aussie strength, it just looked like it was coming into a decent area of support. We kind of nailed this low earlier in the month for the play to the upside, which was great. Haven't done anything since. So now here we are coming off of slope resistance on the daily chart. Here's the median line for this slope that we added from last month's low. Okay, here's the pullback, a basic 618 of that range, and former slope resistance, slope support, decent pivots, acceleration on every break, converged on the July open. And the July open comes in dead on at 82. So you have the 618, monthly open, slope, weekly support, and multi-year trend line support all up in this spot. So for me, it was just kind of like trying to test where we get the low. Now, that being said, I do have less confidence on holding a trade here. As a disclaimer, I'm not in this one. I didn't want to double up on Aussie exposure, but the entries were great. We were looking for an 82.04 from 81.88. It got as low as, let me just give you the actual low coming at 81.81 before reversing, okay, in Asia. So looks pretty decent to me still. I'm been looking for slope. I was kind of scoping out something like this last night. It's too early to kind of mess with it yet because it hasn't really seen much reaction. The first touch there looked good. This looked good, but I didn't really know what to do with this. So I don't really know what to do with this slope, guys. If it's fruitful, if it's gonna be something effective, but that's the reason I don't like playing it as much, is because I just don't have any slope to the decline. So I don't know where we validate that the reversal is actually in play. So that's my only issue at this point with Aussie yen. You do want to take a quick retracement just off the highs to give yourself some measurements on the upside here. Weekly open resistance comes in at 82.68, 82.69. A basic 38.2 comes in at 82.61. So that'd be the first area I'd look for on the upside here for Aussie yen if it's going to make a broader turn. Sub 81.88, if we break these lows, again, the weekly charts, the daily charts all suggest that you have sort of a bigger downside play to go. Okay, 81.50 would be this slope. I guess we should put this on the intraday chart at this point. Put that there, scratch that. This is the slope that we're looking on the daily chart. So that would be, I guess, your first level on the way down if you do break. But as it stands right now, I'm kind of looking for a stretch higher, near-term recovery in Aussie yen. Now, again, that puts us at odds with dollar yen, but we have to take every trade on its own merits. We have to take every trade on its own merits. I think there's a little bit more upside there. Any questions on Aussie yen or Aussie dollar? The whole premise was trying to find some support here into this drop near 81.88, and we got it. Ty says one more question about the Aussie. At what price should we be looking for? 73.27. Ty, I hope we don't get back down there again. No worries. We can go back to the Aussie, but I hope we don't get back down there again. 73.27 was the major support level that we've been looking at for months, right? That's on the weekly charts, right? That's this level. So I've been trying to fade every drop we get into it. You're not always going to get into 73.27. You know what I mean? Obviously, you saw multiple weeks where we wicked out just ahead of that. You saw 2 weeks where we drove just below that. Markets don't work in a vacuum, Ty, right? So we have to kind of recognize when exhaustion is there. You're not going to always get that stretch, but that's the broader play. If you're looking to near-term play this, I hope it doesn't break this low. Okay, if you're looking for a fresh near-term position, Ty, you're looking for this pullback wherever you're comfortable taking a stop against this low. If you're comfortable taking a one-to-one risk reward, that's your perspective. It's all based on your risk tolerance. For me, I had a stop below this swing low right here. It was like a 73.45 stop with entry at 73.64. So for me, it was like, all right, well, 25 pips. If we catch it, we catch it. If not, I'll wake up and we'll be stopped down. We'll be done. Now, typically, I like to enter the market with market orders, but I was going to get really pissed if I missed this one because I've been waiting for it for a while. So, but there was a clear-cut, visual entry here as well. If you drive into the 30-minute, you were getting divergence into these subsequent lows in momentum. Even tighter, there was actually a decent trigger on the way up right here on the 10-minute to get you in the long position if you were trading in Europe or late Asia. There's a couple of different ways you can play this. At this point, the reason that we're out have to trade is because you think you get a little bit of a pullback here. I'm not really surprised if we get it. If we get stopped out at break even, so be it. As long as we hold these lows, I think you look for a break of the weekly opening range to kind of validate the reversal. If it drops, let me go back again. I'm sorry. If it drops a tie, sorry about that. Okay, we're back. If it drops, guys, are we back? Okay. Yep. If it drops below this low, it's not all, it's not game over yet. I just don't want to be in it because your basic last hope is this pitchfork, and we haven't seen too many reactions off this for me to base a stop against this trade yet. So typically, typically if we were in this trade and we had seen much more reactive plays, it reached into the median line, you had some play on the 50 line that broke, then I'd be comfortable like trying to play a stop against somewhere along that parallel. But nothing's held here. We didn't reach into the median line. The 50 line was resistance for like it's pitiful, and here we are sailing through again. So you can't really get too confident about it. So for me, the only stop I'd play is against this low. If you're interested in trying to get into this again. That being said, 74.11, 74.25, they're clustered pretty close. That's what we need to clear to validate the larger break. Okay. If we don't get an opportunity, so if you don't get an opportunity to get back in, if it breaches through the pull back into 74.25 or thereabouts into the weekly open, that would be the entry for the stretch into the weekly highs, right? Because that would be just an objective sort of weekly opening range break. So there's a couple different ways you can play this now, but I hope we don't see 73.27 again. We could, but not the ideal scenario. Okay, any questions on Aussie or Aussie yen? Last Aussie cross, real quick, Aussie Kiwi. There's really not much to do on this just yet, but I did want to highlight it because it was a setup that we talked about last week. I just laughed when I opened the chart because it's the same exact setup. Nothing has changed. Here's Aussie Kiwi from last night. Same exact slope that we were working with since back here on the 17th. Okay. Same slope, nothing's changed. We rallied right into resistance that held, turned to the downside. We're still basically holding that 108.66 level, which is support, and we're basically nestled right into this corner. So look, look for the breakout. You have a clear weekly opening range. You have the July monthly open now converging on slope or thereabouts. It's about 109 and change, 109.04. If we break through this, look for the reversal play higher. It's going to be which one's the biggest winner here on the Aussie and the Kiwi reversal, which both made some pretty decent bounces. So I would favor a topside break, but what I want to keep your focus on is this broader consolidation. Series of lower highs, a series of higher lows. Look for this broader consolidation breakout. So my point being is I have no problem if we break this buying pullbacks, but not beyond 104, 109.40, 109.50, not beyond this region, okay? Because if we consolidate there and fail, you'll actually have a decent play back to the downside, and this might stretch out a little bit more towards the apex. So for now, it's a really well-defined risk, right? Because if we break these lows, not only you off a monthly opening range low break, but you also have the consolidation break. You also have a 38.2 Fibonacci break, and that would clearly shift the focus down to 108.34, clearly. So really well-defined risk. The top side, you're not even trying to play the breakout, right? Even just to the top side of the range, you still have a good 150 pips, 160 pips to go. So just a look there at Aussie Kiwi and kind of where we stand. Any questions on that? Something we'll continue to track. Not ready yet, but I do think we get some clarity on this in the days to come. There's not much more time left that we can spend in this formation. Questions, comments, concerns on any of the Aussie crosses we've been tracking? That's last night's update. The other thing is crude. I find this storyline interesting. because of obviously the tweet that we got from Trump yesterday with regards to Iran and sort of saber rattling on that front. There's been concerns about whether they would dare to close the Strait of Hormuz, which was again 40% roughly of global oil goes through that canal. So it's the first thing I kind of run and I look to see what the move was in crude, and it offered no support. You know what I mean? You might have gotten a little blip on the radar if you look really near term, but um, point being, our whole the whole thing in crude has been the reversal off resistance, right? We came a huge level. So the downside, median line was the first target. The sliding parallel that we have off just the yearly lows. So this just takes into account 2018. We tagged it again there, kind of probed below, but that's sort of where I want to ease up on the short side. 66 is sort of where that region resolves. The low close converges on slope down at 64. Down at 64.27. I don't think necessarily you get that low. My base case assumption is that you still kind of get a stretch towards 66 before you make a rebound. So this is the weekly chart on crude, right? It's going to be in the headlines for sure, guys, over the next couple of days. So if you're a commodity trader, if you're interested in playing this near term, here's what the levels look like. So the daily chart has us sitting on the 100-day moving average. Just below that are the slope that we were looking at on the weekly charts. And that's why I think, 786 retracement of the advance, 6607, 6610, okay, comes into effect where you get the slope as well. One last drop into that region, I wouldn't be surprised to get it. And that would sort of also consolidate a 1, 2, 3, 4, 5-wave drop. You'd expect some sort of near-term recovery off that region. So look, I still think the risk is for a probe lower. Near term, here's the sort of the same slope we've been watching since last week. I highlighted it last night. What was that, a break or not? Just hit the former swing low there and reverse sharply. And here we are yet again testing basic channel resistance. 1 touch, 2 touch, 3 touch confirms. You can sort of put that aside as sort of a false break scenario. And here we are again. So look, if we break 69.21, you probably get a larger correction. My focus is for a possible drop into one of these levels. Wouldn't be looking to play this short from here. Remember, we're at multi-week lows. The way I would be looking to play this is looking to fade a drop into one of these levels, see how momentum looks, see if we can't get an entry. Either 67.14, that's the 2010 low, really clean pivot in price, support, resistance, breach, acceleration, support, okay? Or 66.19, that'd be an exact 100%, 2 equal legs lower, and then that sliding parallel again in red. So I'm not buying that we kind of just cleanly bounce off here. If we get 69.21 break on the upside, objectively, it's the weekly opening range high. You look higher. Till then, I think the risk is for a drop in 67.14, drop in 66.19. So that is crude prices. Watching crude, would we watch dollar CAD as well? So Kelly, that's a good question. I haven't ran the correlation as of late, to be honest with you. So it would be interesting to see what that looks like. But that sort of corollary play hasn't really been my favorite move. Now, it just so happens that, well, let me just go over dollar CAD on its own levels. I'm not going to necessarily put that emphasis on it. I like CAD strength. So whether that's a near-term bounce in crude prices, whatever you want to call that, but dollar CAD is just stuck in a trap. Weekly chart. I segue here. Dollar CAD, it is on the list. So this is 1, 2, 3, 4. Dollar CAD number 5. This is my issue with dollar CAD. It's this 31 godforsaken barrier. 100% extension off the lows, 618 retracement off the highs. I love this confluence region, and it's always a decent I shouldn't say always, ever. It's typically a very strong pivot in price. So here's resistance, here's the breach, and we've just been sitting on it as support. You know, it looked like we made a close below back here in the early month week, or early in the month rather, and we were looking for the drop deeper towards 29, but it's been a chop fest. So we highlighted it again, I think earlier in the week. Here's dollar CAD. Here's the intraday chart. I'll show you that in a moment, but here's the daily chart. Opening range low for the month is right there. We rallied into, tried to breach the opening range highs, failed miserably, came right back. And again, it's that 31.30 area. It's the bane of my existence in this thing. Shorts have been great when we recognize them off resistance, right? But that's exactly where it keeps failing. So what do you do from here? I'm not going to sell into to support when it could stretch as high as 132.40, 132.50 again. So I'm stuck in dollar CAD. I don't know. You know what I mean, Kelly? I don't know what to do. He says I'm looking at short dollar CAD at 132. Well, let me look at the intraday chart. So this is the daily chart, right? 32.50 is my sort of line in the sand still. I want to see that hold. I know we probed through it last week, but now you have the median line, the pitchfork right there as well. So I kind of want to see that hold. If we do spike on the intraday basis, here's what it looks like on the scalp or the 120 minute. This is a modified pitchfork from the decline off the highs, right? So boom, boom, boom. You know, again, we've been sailing through the median through the median line on both sides of this. So, you know, all things held constant, we broke 30. We failed ahead of 60, so momentum is starting to be a little bit more on the bearish track. I just don't like that we didn't turn at, you know, any significant slope or any significant level. Whoops. So I'm kind of sidelined on dollar CAD for now. Dollar CAD weekly. Would a trigger break in momentum to the downside suggest exhaustion? Cheers. Digon. Yes. And that's another thing. Do you see this trigger? I mean, what do you do? Do you get into the short and kind of hope that breaks? That's not a strategy, man. I mean, so I don't know, but yeah, 100% Digon. That would be. Um, he says it's asleep. Exactly. And that's why patience pays, guys. A lot of times, again, having an opinion on the direction is not a trading strategy, right? So from where we are right now, how this thing is trading, where we are in the range, where we are in the structure, uh, you know, I just don't have a decent play on it. The play for me and why I highlighted this chart early in the week was if we had rallied and failed into 31.60, that would have been a decent high to try to push through support and get these downside targets. But now that we've broken the median line, we haven't had many plays off this structure yet. So I can't sit there and base trades off that pitchfork when market hasn't really respected the levels yet. So that's when I stray away from it. That's why for me right now, I'm kind of just like sitting this one out. You know, if it rallies again, look for 50%. 618 is right about that same region. Um, you know, the 50 line is in this region. If we get a reaction there, sure, you know, maybe it'd be a decent short, but it's just not as clear for me yet. It's just not clear for me yet. If I put a gun to my head right now, I'd probably get short against this high, trying to play it back into this region. But you're playing the real near-term stuff. 32 would be a decent area. Digon, or who was that? Kelly. 32 would be a decent area. You know, the 50 line here would be a decent area if we stretch into it. But until we do, maybe put a modified shift on that instead of just a shift. It just pitches the fork ever so slightly some more. So that would actually give us a little bit better pivot here. And a little bit of a better pivot there as well. So if we do that, 32 looks even better at that point, right? So actually amend that fork on your charts at home, guys. with the reference points. Kelly says, thank you. Hey, more than welcome. Any questions on dollar CAD? That's number 5. Okay. Dollar yen, number 6. Here's dollar yen. So look, it's made a cozy opening range for the week, just above support. This is a 618 retracement. Let me show you the outside charts first. Okay, so 110.88 is sort of still the level to break on the downside to really validate the reversal or the exhaustion snuff out here. Really, I mean, this thing couldn't have played out cleaner, and it's very rare that you get to say that about dollar yen. So when it happens, you're going to cheerlead all you can, especially when you get to catch some of it. So 1327 was a big level. You had the 52-week, or excuse me, 200-week long moving average. And a 618 basic retracement from the decline off the highs he made in 2017. So although we broke slope, although we broke a 618 extension or a retracement here off this near-term decline, it's a 50% retracement off this broader decline. Although we broke this big region, we failed at a 618 retracement, at a long-term moving average, at the objective yearly opening range highs. So it turned our attention lower. We've been playing the short side. This short side play now comes into sort of key support. Former swing highs on the upside, former swing lows on the downside from last year, slope from 2012, right? That red line. 1 touch, 2 touch, 3 touch, 4 touch, break, acceleration. That slope, still been a decent pivot, is right there as well. So this is the make or break level, at least near term for dollar yen. So if you're holding short side exposure, be cautious here. I'm out of anything on there. I still do like the short side, but you need to see that break below 110.88. Or if we rally back towards 111.61, it might be a decent entry again. 111.62. If you get back up here, look for failure again. But the basic scenario needs to take us below 110.88 near term to really get this thing going. You have the 200 or the 52-week moving average just lower. It's like 110.16. But the weekly charts are pretty clear on where we are, right? Momentum failing right at 60. Right at 60. Okay, so what does that mean for us? Well, here's the daily chart. Would we want the break below the SMA as well in the weekly? Dagon, are you talking about the dollar yen chart we were just looking at? So below this 52-week, that would be added conviction. But the first line in the sand for me is 1088. Does that make sense? So there are some levels like this, guys, that you look for to play the break. Once it breaks, you play the reversal into it. As soon as you see a tag, that is sort of your entry to get back in. But I want to keep these weekly charts always in focus because what's the next level? What's the level that would add conviction to it? And certainly a break below the 52-week would add further conviction. You've seen some pivots here. You've seen some pivots here, right? You've seen the break be acceleration, the break be acceleration. But as of late, not as much, right, Dagon? So when I see something like this, I won't ignore it, which is why it's always highlighted on the chart for you. But it's not necessarily where I would close out the trade. I kind of want to be paying attention, be attentive there to see if price reacts or not, and if we get the close above or below. So a lot of these things you use for validation, you use sort of after the fact, right, or to validate an idea, not necessarily as a trigger to get into the position, right? And besides, this is a weekly chart, so we add it, as a text of frame of reference for where we are. So that's dollar yen on the weekly. He says, great, thanks, right on. Here's dollar yen on the daily. Add to that, you have the monthly open right there. Monthly open support comes in at 110.65. So 110.65, 110.70. Top side of that range is 110.88. That's what shows up on the weekly charts. Look where we just bottomed last week, or yesterday rather. So we bottomed right into that and rebounded, which is why, again, for me, it wasn't worth trying to sit in it at all. If we get some more gyration sideways here, so be it. That's the level to break. Look what comes in down here. It's the 200-day moving average. And this is the 38.2 line. Yes, 38.2% line of the slope. Support, just missed it there. Gives us that region right there as your sort of downside target on the break. Just shy of 110. Okay, but again, it's how do you trade a position like this? It's down. This is going to be the fifth consecutive day down off big resistance. We loved where it turned. You know what I mean? But you're 2% down. 5 consecutive days. It's a little risky here. You haven't gotten a close in momentum below the trigger yet. This is intraday right now, right? So it means nothing. If this reverses, it'll look like it never even dropped. So look, if we break below the monthly open, we break below this support range, price holds or the oscillator does close below that line, that would be a near-term short sort of confirmation. But it's heavy to trade this like after the fact that we've dropped 5 days in a row. So you know what I mean? My base case scenario is that this could actually still see boom, like sort of A, B, like still one more high for the week, maybe failure back into that former slope support, now resistance. We didn't quite get the stretch. Might be the play, and then you get resumption. But at the end of the day, I just don't think it's warranted here to try to press dollar yen short from here. Plus, if you notice, the last couple of weeks, and this is so irritating, dollar rallies early in the week, then takes a poop, right? So it's like, well, I just don't want to be chasing this at this point. The short was great, 111.15, 110.88 was actually just the first target. I thought if you broke here, you were going to see both of these. The first target hit, but then we quickly recovered. So it kind of wasn't, I don't know. You have a weekly opening range now above support. What do? You wait for that weekly opening range break. Would you short at 111.62? Yes, I would. I would. Now, Dagon, as I always say, it depends what the price looks like when we get there, right? But that would be my ideal sweet spot for this thing to fail. 100%. The thing is, I just, I don't even know if you get that high. It's a pretty steep break. But boy, I think that would be sweet. Oh, I'm sorry. Short at 111.62. Oh, I'm so sorry. I thought I saw 112.62. 112.16 rather is the level that would be more favored in my humble opinion, Dagon. I misread that. I'm sorry. 111.62 is near term resistance. I wouldn't just short that off the bat. If price looks really heavy there, momentum's holding 60, it'd be a decent area to find failure. But the sort of conviction trade would be for it to rip higher into this pivot zone. Resistance, break, support, 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 break, acceleration. That is on the 618 line. That would be sort of a decent area for a little bit. You look for like the washout play, right? So yeah, I'll be paying attention to this level, but the ideal play, Dagon, is for the deeper stretch, a little bit higher into 112.16, not 111.62. Kind of a little dyslexic this morning. Sorry about that. Does that make sense? He says, okay, thanks. Right on. Okay. Questions on dollar yen? Pretty clean on the levels. Just sort of losing some steam here. So we need to either see the downside break confirmation here and here with a close, or we wait for the rebound and recovery, a little bit sharper of recovery to get back on the short side. Let me add one more thing on this. It's going to get pretty messy, but let me just stoke it out real quick, guys. I want to see what this retracement looks like. Okay. Okay, we can clean this up a little bit. So I put bearish invalidation at 112.25. Okay. With 1167 and 1196 as possible entry points. So let me color code them like this. This is sort of your least conviction entry point. This is where I'd look with more intent to possibly try to fade another move in dollar yen if we rally. If we rally, at the end of the day, finito sub 110.88, 110. Well, you look for that conviction break on the daily chart for the monthly open. It's a little bit lower, but if that gives out, I think the downside targets are clear. But for the entry, I'd be more interested in one of these levels, 111.96, 111.25 to fade. Make sense? Is there a BOJ or a Kuroda event this week? There is. I think there's a decent amount of yen data actually. It's low stuff. It's department store sales, supermarket sales, leading index, coincidence. A really low stuff that came out last night. You got outright bond purchases, also a low impact read. So no, you don't really have anything from the BOJ that's really big this month or this week rather. Again, to Thursday, everything starts to pick up, right? Because you get CPI out of, well, you get CPI out of Australia tonight, guys. So keep your eye on that for guys who are trading the Aussie. Then you get Eurozone CPI. Then we get CPI out of Tokyo on Thursday as well. So all these inflationary reads will be quite interesting, but nothing too big from Japan this week. All right, so that is dollar yen. Let's move on. It's number 6. Number 7, I really just want to touch on real quick. I'm not involved in it personally, but Kiwi dollar. It is a setup that we had highlighted earlier in the week. Here's what it looked like on the Sunday update. So the focus was we were opening. It was just like Aussie. I think Aussie was a little bit more conviction at like opening at resistance. We kind of probed a little bit higher. This thing just pulled right lower, right? So I don't have merits that this pitchfork was in play yet. So our base case scenario is look for 67.80. Bullish invalidation was simple. 67.53. You had the 618 retracement of this advance and the 618 retracement of this advance converging on slope support. So this was a given, as close as you can get to a stop below that as possible. Here as was. The closest that we got was 67.70. So big reversal. We're not out of the woods yet. I still think if you get the drive lower, you don't want to get below this low. So the ideal play was if we do pull lower, get as comfortable as you can with a stop against this low to try to play the upside break. But the levels remain unchanged. 68.20 is the first topside region we need to get through. That happens to be the objective weekly opening range, 68.25, and basic trendline resistance, 3-point touch. So if we get this breach, 68.51 and 68.75 into 68.85, this 10 pip region would be your key levels on the upside. Make sense? And that is Aussie Kiwi. Or rather, that is Kiwi. I still prefer the Aussie, but I think Kiwi has got some more upside play as well. Daily momentum trigger pending, which is again why, if you're not already long, don't tempt longs into this region. This is pretty big. If you're holding longs, it's a decent area. Again, I took off that half that Aussie move. You would want to probably do the same thing here. Just on the fact of, the retracement, basic trend line resistance, the 50 line, there's a lot here. So good area to sort of bring protective stops in. If you get the breach on a closed basis above 68.11, you get a close above that trend line or that trigger and resistance, again, that would further fuel the flame of our expectation for a larger rally here in Kiwi. So that's number 7. So before I jump into the rest of your questions, which I'll take each question one by one, I just want to circle back and cover DXY. So what does that mean for where we are for the Dixie? Here's number 8. So, here's the dollar index, guys. There's really not much to say. Why? Kelly says clear as mud. Why do you say that, Kelly? On which play? On the Kiwi? What confuses you, man? This is where we're coming off of as far as weekly support. The reason why we're playing the rebound is because we're coming off a huge critical level. He says, missed the long, my bad. Don't feel bad, guys. When you miss a trade, there's always more opportunity. FOMO is a very, very dangerous thing in this sport, right? The fear of missing out. You have to kind of take it in stride. So DXY. Here's the daily chart. If it decides to load, okay. Not really much to say here. The momentum trigger has been ridiculous, as we said on the break below once we made that turn. As we were getting faked out and we were giving up, and the dollar kept on ripping, and the dollar kept on ripping, momentum kept on holding that former slope support as resistance. One touch right after gives you conviction, and there's the second turn. So, we were giving up completely on the dollar short. This thing is pressing. So I don't blame you, Kelly, for missing a piece or two. You're never going to catch all of them. But here's dollar yen, here's dollar. 94.27, 94.20, still support. I want to stay bearish sub 95.15, 95.32. Ultimately, want to see a tag of that basic median line there. Was that a parallel there as well? Intraday looks like this. Here's your weekly open. You stretch into a high. You look for defense of the weekly opening range, lows. So again, the upside channel, you had 2 touches here, not much, but when you extend it off the high, you got a perfect tag of the high there before pulling back. Looks like failure. So if we get a break of the weekly open right back to the downside, sure, 94.13, 94. But just keep in mind, again, we need to clear the objective monthly opening range. It's now set. You failed at the highs. Don't get aggressive until we clear, either that downslope or at least the monthly opening range low on the DXY. But my favorite place is to figure out. Guys, I'm so sorry about this sound issue. Tomorrow will be from the SB office. This won't happen again. 94.93, 95.10. If we break the highs, is kind of where I wanted to see this thing turn. What I want doesn't matter. If this ends up being the high, if we break the weekly opening range low, you look lower. So for the dollar, still wouldn't put it past this piece of crap to kind of rip higher first and try to rip some people off before turning. But what does that mean for euro? Well, I don't have a very clear near-term prospect on euro. You've seen that I haven't actually put out a scalp or an intraday chart on it in quite some time. What I did do is provide you guys with the weekly charts last close on Thursday of what I really wanted to see happen. And it all materialized, guys. It all materialized. DXY held below the 200-week moving average, which we were testing yet again. The euro held above the low close from November at 116.05 yet again. And we actually closed higher on the week. So everything that we wanted to see happen from the weekly standpoint, sterling came into key support. That slope held. Really nice rebound. 3160 was resistance into the end of the week. Again, all of the weekly charts panned out and held what we wanted. Aussie dollar 73.27. We wanted to see that hold. Obviously, that's one of our favorite trades. So the weekly bigger pictures still look clean, but that doesn't mean there's an opportunity to get in there near term. So obviously the euro trade, guys, that the swing is on. That is what it is. We'll have that on board. But look at this resistance trigger. We want to see that break. We might see some more sideways action. Here's the euro dollar daily chart. Looks like consolidation. Lower high, lower high, lower high, higher low, higher low. So could see some more back and forth. I want to see a topside breach. Again, 1827, 1850, sort of your big range of resistance. This is still within the June range. So we haven't even cleared the June range, let alone the July opening range. So further clarity is needed. Treat it as a range as such until it breaks. But I'm looking for a break of this consolidation. I favor the topside breach. You have a support trigger and momentum to watch out for. Here's the intraday chart. Again, the slope hasn't been super fruitful as far as the median line. Looks like the upper parallel just missed those highs. So maybe a drop into 116.41 for another opportunity to get back on the long. If you're holding long from the swing trades, that stop is 16.25. And we're looking for a larger topside breach here in Aussie if this continues, in Euro if this continues on track. But it needs to start to make a move to the upside here, or at least clear the July opening range. I mean, I'm not asking for much. We the June opening range remains intact, but even the July opening range, which is embedded, here's your July opening range low. We just tested those lows last week and it rebounded. So even the inside July opening range hasn't even been broken. But again, patience pays. I haven't gotten involved in in Euro over the last couple of days, but we'll see. If you're on the swing side of trades, guys, you're in the money on that. Barely at this point. So take it for what it's worth. I like it higher above 1640. It's my level. That's my level. So that is Euro number 9. Number 10, really quick. I only have a couple minutes left and I'll get into your questions. Number 10 is sterling. That's the only thing to look at there as far as I'm concerned is the weekly chart as well. Here's the British pound. Boom. Last week you recovered a decent amount after probing again or trying to break through those swing lows, 30.27. You have slope right there. I think the risk there is for a little bit of a recovery as well. There's nothing on the intraday charts that really is to turn you on here just yet. Loved where we bottomed out last week. Again, the weekly opening range is setting up just below 131.64, and that's the line. Sort of validate the reversal play. Okay. Okay. Your questions. Number 10. Let me take an order that came in. We got a question from Marco wants to get Euro Kiwi. It's an interesting pair here, Marco. You're on the short side of the trade at the moment, right? Yeah. Um, oops. Hmm. Ah, all right. It may yet still have some color. Okay, so here's the objectives, the objective stuff, which is what I live for. You have set a very clean weekly opening range. Here's your weekly open. You set a low. You tested the weekly opening range high, and that was a clear-cut failure yesterday in the pullback. So objectively, aside what Mike Boutros thinks or anyone else, you break below 171.71, you're looking at, objective weekly opening range break, right? So Marco, that would certainly fuel some further downside play. On the short side, I wouldn't get crazy about that 50 line because it hasn't really been. That actually looks better. The 75% line, wicked out, wicked out. That gives you basically, don't ignore 71.14 because it's the 618. That's the old 618, huh? Yeah, we don't need that. Yeah, my target would be this downside slope where we found support here, where we found support here. Okay, determined on time. 38.2 retracement, 100% extension. That gives you an overlap right around there. All right, so that'd be sort of a quick setup for you, Marco, on how I would attack Euro Kiwi. Bullish invalidation objectively would be obviously the weekly opening range highs, but also you see that slope um, converges on high day close. Is that still the high day close? Bear with me. Let's check. Yeah, high day reversal close. Wow, still there. 75, 72.58. So that would still kind of be your bearish invalidation, at least for the near term front. You know what I mean? Marco, does that help? I'm not sure where you're short from, but 71.77, I'd watch it. It's the 618 extension of the decline, so it's nothing crazy, but the weekly opening range comes in lower. So if you get a drop into this region, it might be worth like taking a little bit off, but don't get, don't get too aggressive on it. We really need to see it break below that region, and then I think you move on down near that lower slope. Again, 71 is where the slope converges, but basically bigger Fibonacci convergences are 70.70 into 70.86, this region down here. Make sense? He says, yes. Ty, I didn't forget about you, buddy. Euro yen. Let me just hit Roxy real quick with this Bitcoin chart. Roxy, I don't have a lot of conviction on this, okay? But I'll show you the charts, obviously, anytime you want to see anything on my end. Here's what they are. Remember, just to keep a quick reminder, everything here is in log scale. Take a little bit more of a percentage-based look at the moves, but Bitcoin looks like this. Might be a breakout. Might be a big breakout. Where are my charts? Crypto, Bitcoin. Ah, woo! Look at that thing. That is so funny. So I'll tell you a little story. I was doing a presentation for the Australian sales offices for IG. Since I visited there, kind of built a good relationship, and they had a lot of questions. We talk about markets, kind of give their guys a little bit of a flavor on what's going on. And one of the guys was asking about Bitcoin as this thing was rallying yesterday. We were literally right at 78.61. What I told him was, um, you know, this is my line in the sand to invalidate the downtrend. Okay, it's 83.54. That's the level. You have basic slope resistance, one touch, two touch. Whether you want to call that a third is your prerogative, but that's right there. You got a 618 retracement of the decline from May. And in my mind, that's what would validate the break of both this trend line and this pitchfork and would validate the move higher. It's just, I think, nutty that that's exactly where we just bottomed. That's so funny. Or that's exactly where we just peaked. The high was 83.56. We'd be like $2 and pulled back. So it's make or break here. If you're holding Bitcoins, anything southbound of 66.90, I'd say you probably want to take a little off the table. Stops at break even or better, and wait for the break. Anything north of that, I know this is a trade for me. This is not an investment. I'd be out here. How significant is the fact that we're still below the 50-week moving average? You're above the 100-day, but below the 200-day. Look at the 52-week. We're testing it like right now, yearly resistance. I'm not really a big fan of using moving averages too big, especially on commodity currencies. There's just not enough price scale and time frame, I think, to really rely on these. My humble opinion, Roxy, with assets that are higher volume on a larger, there's more market participation. Those are when I think these moving averages tend to be a little bit more effective, but on scale for these, I don't really pay attention to them too much. So I wouldn't put too much credence on that at all, to be honest with you. I'd be looking more near term. You're between the 100 and 200-day moving averages. That's kind of what I would look at. South of 83.54, you are at risk though, near term. That's exactly the line in sand I told the guys last night on the conference call. That's the level we need to breach to validate that we are back on track for a resumption. Other than that, guys, it's just basic. It's basic slope resistance. This could just be a probe, and this is where the start of the next leg lower is. I don't know. I do think we break higher, but we need to pull back from here near term if we are going to do that. So let's see. If you're holding longs, like I said, just get protective. Take maybe a little off, but you're in overbought condition. That's what you want to see. You're testing resistance. We just need to get some acceleration here to validate that we're back on track. Make sense? Last but not least, Thai, Euro, Yen. Mr. Thai wants to look at Euro Yen. We are over on time, but we will look at Euro Yen. Euro Yen. Okay. Roxy says, thanks so much. You're more than welcome, Roxy. My pleasure. Here's Euro Yen on the weekly. And this is where this is the only place where this thing is clear to me. So do you see where we turned? This was brilliant, actually. So this slope is not as much as instrumental as just where we are in basic trend line analysis. Here's basic trend line support. We took that slope, extended it off to this high. You got a tag, breach, saw acceleration. It pivoted here on both sides, but that region converged on 52-week moving average. Get a reversal candle off that region. Here's the pullback. How aggressive do you want to be on the pullback? Again, my problem with this is that I'm looking for Euro support. We talked about the Euro chart being at support, right? And I'm looking for Yen strength. So for a euro yen trade, I typically tell you guys not to correlate like that per se, but for the euro yen trade, I think it's reflecting the same type of demeanor where you could see a little bit lower, but I don't have any really strong opinion. Momentum is right near 50, so there's not a strong drift in one way or the other, Ty. But this weekly chart, take a snapshot of this if you want this for reference. Remember, there's a camera button of your go-to webinar screen. So take a snapshot of this just to keep for reference, but let's see what the near-term levels say a little bit closer. So here's the pitchfork we were working with off of on the daily chart. A little bit different of a reference point. There's the break of the lower parallel, test of resistance, little probe through, failure at the 200-day moving average. Really nice spot. Here's the pullback. Again, my concern with continuing to favor the downside. You know what I mean? I like yen strength, so that supports it, but I think euro is overdone here too. So look, if we settle today back below the 100-day moving average, back below this 618 extension, the risk is lower. But how do you play it, Ty? The problem is that you've had already, this is again, going to be the 5th consecutive days of decline. I can't short a fresh position into a 5-day decline. So you have to look for some sort of corrective bounce before you get in, right? This is what I was looking at. I guess I must have been scoping it out for someone either last week or this week. So, that slope is no longer in play. Maybe you get some basic channeling. In my humble opinion, the play here is to the upside for the recovery, if you're looking for a near-term thing. Hmm. Well, I keep it at the weekly open. Weekly open resistance comes in here. You can scratch 3086. Those are the new levels I'd be working with. Actually looks pretty clean. Actually, it looks pretty clean. Now, you're looking for a low to fade, in my humble opinion, Ty. So, it's either a drop here in this pocket, you look to fade that, or let me take that back. If and when we do get that drop, that would be for me. I'd be looking for exhaustion. I'd be looking for long entries. We need to get through the weekly open resistance level, which is the 50 line, and that would be an objective sort of reversal play to the upside again. But near term, you're in the trend here or not. So immediately from here, yeah, you could stretch lower. Mind the divergence, albeit in oversold territory, so a weak divergence. But I would be looking sort of to stretch or to fade weakness near term, looking for a little bit of a rebound here in euro yen. Now, once we get a near term low, tack on a quick retracement there to see the convergence levels to the upside. But that's how I'd be looking to play this one. Make sense, Ty? I hope that helps, sir. He says yes. All right, guys, way over on time. Thanks for everyone who attended. I will be back on board tomorrow. Quick reminder, schedule note, there will be no intraday webinar on Thursday. I'm traveling out to St. Louis to see my man Jamie, so we will forego that webinar, but we'll be back tomorrow, same time, same channel. Keep in mind, again, the Aussie CPI data that's on tap. And I will see you guys tomorrow morning. Best of luck trading. And we'll be in our office, so we won't have these audio issues anymore. Sorry about that. Cheers.